This is Alaska. Known as the last frontier, its name is derived from the native Aleut word Aleyska, meaning Great Land. In this new series, which will be mixed into the production of our non-US videos, we'll be exploring the weird and wonderful economies of the US states, finding out how they rank against the rest on a variety of economic indicators, what drives them, their economic challenges, as well as their opportunities. So to ensure you stay up to date, don't forget to hit that subscribe button and notification bell. Now back to the video. The economics of Alaska are steeped in controversy from the very beginning. You see, Alaska itself could be considered one of the greatest deals of all time. Colonized by Russian settlers in the late 1700s, it was only ever sparsely populated by the Russian Empire. Worried about annexation by the British, decided to sell Alaska to the United States in 1867. The deal was brokered by US Secretary of State William Seward for $7.2 million, or 2 cents an acre, a ridiculously low amount for the largest US state. Even in today's money, the Smithsonian calculated this to be $113 million in 2017. Now, while this ended up being a bit of a bargain, at the time, old Will Seward was ridiculed by the press, nicknaming the purchase Seward's Folly and the Seward Icebox. Back in the 19th century, Alaska was an even more remote place than it is now, only really accessible by boat and without much to show for it when you got there. However, Alaska's fate started to change in 1896, with the beginning of the Alaskan Gold Rush, attracting tens of thousands of prospectors. This natural resource-driven rags-to-riches story is a common theme in the state's history, and something still relevant over 100 years later to this day. So with a brief backdrop in economic history, how large is Alaska's economy? According to the Bureau of Economic Analysis, Alaska's gross state product was $54 billion in 2019, making it the 45th largest state in the US. To put this in context, its economy is roughly equivalent to that of Guatemala's, but with 23 times fewer people. On a US basis, it accounts for 0.3% of total US GDP, which seems small until you consider it only has a population of roughly 730,000, the 4th smallest in the US. However, a key point to highlight is just how big Alaska actually is. It is truly vast, roughly 2.3 times the size of Texas, or a fifth of the size of the rest of the US combined. Given all this land, you may be surprised to learn that 99% of it is in the hands of either the federal government, state government, or native corporations. Public ownership of the land is literally massive in Alaska, with nearly 90% of land being government owned, only a meager 1% in private hands, and native corporations accounting for the rest. Unsurprisingly, this land ownership structure matches the state's economic dependency on the federal and state government. Alaska ranks first among US states in federal expenditures per capita, a trend which carries through into the job market, where an estimated third of all jobs depends directly or indirectly on federal spending. But federal spending aside, what are the key industries driving Alaska's economy? Firstly, there's petroleum. As alluded to at the beginning of this video, a common theme in Alaska's economy is a dependence on natural resources, and chief among them is oil. First discovered in Prudhoe Bay in 1968, oil quickly became a leading driver of the Alaskan economy, a driver so large it led to the largest privately financed construction project in history, the 800-mile Trans-Alaska Pipeline. Completed in 1977, it allows oil to flow from the northern slopes to the northernmost ice-free port of Valdez, which is the same port made infamous by the Valdez oil spill. With approximately a third of the US's total oil supply, Alaska's petroleum sector supports roughly a similar number of jobs directly and indirectly. However, the state's oil dependence is best highlighted by the state's budget, accounting for a staggering 85% of state revenue. Such a high percentage reveals the state's lack of diversification and the vulnerability of state finances to changes in commodity prices. Secondly, being surrounded by 3 seas means Alaska has a thriving fishing industry. The state has more coastline than all other US states combined. According to analysis by McDowell Group, the seafood industry accounts for the largest share of private employment in Alaska after oil and gas. However, the industry is seasonal, creating economic uncertainty and vulnerability for its workers. Sticking with seasonal industries, the Land of the Midnight Sun is a growing tourist destination, An estimated 1 in 10 jobs are tourism related, bringing with them new consumers to a small and somewhat isolated market. This isolation is why less than 0.5% of tourists in 2019 arrived by car or ferry, with over half arriving by cruise ship and the remainder by plane. A testament to Alaska's isolation, geography, and infrastructure challenges. And finally, back to resource-related industries, Alaska's expanses make it a key US mining state. Historically known for its gold, the state actually contains half the US's coal reserves, alongside its largest silver and zinc mines. So given its key industries, what are Alaska's key exports? According to the US Census Bureau, Alaska's largest 3 exports were all unsurprisingly natural resources. What is surprising though is that none of them were oil, despite the state's dependence. This is most likely because the majority of Alaska's oil goes to other US states and is therefore not counted as an export. Top spot was zinc, at 20% of exports by value in 2019, thanks to the state possessing the largest mine in the US. Next up was fishing at nearly 9%, a key industry for a state surrounded by 3 seas, whilst lead ores rounded off the top 3, another mining product. At the other end of the rankings, Alaska ranks bottom of all 50 states for agricultural exports, a reflection of its poor growing climate despite the near 24 hours of daylight in the Arctic summer. So, who are Alaska's largest trading partners? Well, given its proximity to Asia, lying almost as close to Tokyo as New York, its top 3 trading partners are all East Asian nations. This shouldn't come as too much of a surprise if you consider Alaska's dependence on maritime trade and poor road connectivity to neighbouring Canada. Its top 3 export destinations are South Korea at 22%, China at 17%, and Japan at 14%, large sea trading markets, some of which are resource poor, making them a perfect fit for Alaska's economy. Moving away from the macro trends, what's the economic situation at the household level? Based on what we've seen so far, you'd expect Alaska to perform relatively poorly on a household income, given the seasonal nature of employment and the high exposure to commodities. However, the state performs remarkably well, all things considered, with a median household income of $77,000, the 6th highest in the US, with just over 10% of its population falling below the poverty line. However, with such isolation comes a cost of living which is a quarter higher than the US average, ranking 7th highest in the nation. Unfortunately for residents, it has the highest average healthcare cost of any state and 3rd highest utilities cost. Ironic for a state with all that oil. A key reason for these high expenses is its dispersed population, the lowest population density in the US, making the provision of goods and services an expensive undertaking. Now, when discussing incomes, Alaska has something quite special, its very own version of universal basic income, distributed by its very own sovereign wealth fund. Well, sort of. In 1976, shortly after the discovery of oil, Alaskans voted for a constitutional amendment, meaning 25% of all mineral revenues received by the state, remembering how the majority of land is state-owned, would be set aside in a special fund. This fund, the Permanent Fund or Perma Fund, is there to capture, grow and distribute some of the oil windfall to Alaska's citizens. Beginning in 1982, the state began to distribute part of the realized earnings of the Permanent Fund to Alaskans as Permanent Fund dividends. After an initial payment of $1,000 to all Alaskans in 1982, dividends have varied and depend largely on the price of oil. For example, the 2020 dividend was $992, down from $1,600 in 2019. Interestingly, the Perma Fund has performed well, growing from $30 billion in 2005 to over $60 billion as at July 2020, making the fund larger than the state's GDP. Somewhat similar to the Perma Fund, the state also contains 13 Native American corporations, set up in the 1970s to assist the region's Native American peoples. These corporations were a response to Native American claims and to smooth the expansion of the oil industry. The corporations oversee 40 million acres of land through a system of 220 village communities. Whilst each corporation has differing levels of wealth depending on the region, they all pay dividends to shareholders who must be of indigenous heritage. In the financial year 2017, for example, they paid between $300 to $3,700 per 100 shares. These shares cannot be sold or traded, and therefore have no market value, but can be inherited. Financially speaking, the dividends these corporations pay out are significant, with 130,000 shareholders and counting claiming over $3 billion in dividends in 2017 alone, collected by approximately 17% of the state's population. Now, when discussing incomes, one of the things not to miss out on when comparing US states is tax levels. If you didn't know, this is because taxes in the US vary, and can do by quite significant amounts. This is where Alaska truly differs from the rest. It is the only state that doesn't collect state sales taxes or levy an individual income tax on any type of personal income. In fact, it actually pays its residents to live there through the Perma Fund. Now, this doesn't mean there are no taxes, with federal taxes and costs on things like real estate transactions, but in essence, it's a lot cheaper tax-wise to live in Alaska than pretty much anywhere else in the US. Unfortunately for Alaska though, lower taxes come at a cost. You see, in your typical US state, economic development that brings new jobs and payroll generally pays for itself through the perspective of the public treasury. In Alaska's case, economic development does not pay its own way. In fact, it makes the fiscal gap even bigger rather than smaller, as all these new economic activities have associated costs, which would normally be covered by the additional taxes a state raises. But in Alaska's case, they don't. There's actually a special term for this: the Alaska disconnect, a problem compounded by the state's financial vulnerability to oil prices, which have often left it with a large state deficit. So what are the other challenges facing Alaska's economy? As you can imagine, a land as extreme as Alaska has its fair share of challenges. Alaska's geography, its location, climate, topography, and resources have driven Alaska's economy in the past and define and constrain its opportunities. Alaska's historical dependence on natural resources creates a boom and bust cycle across many of its key industries. The ability to intervene in this cycle is dampened by Alaska's incredibly low population density, with less than one person per square mile. If Alaska was the same size as New York, it would only have 16 people. This low density is exacerbated by the poor road infrastructure, with roughly 4 times as many airports as the US average, a stat which highlights the vast distances at play in the state. Such distances are a factor in why the state has struggled to deliver Fortune 500 company, alongside a constrained labour market and high costs for business. On the flip side though, what does Alaska have going for it? Firstly, its huge oil reserves. These have provided the state's residents with a regular dividend. In future, the large size of its Perma Fund, which is bigger than the state's GDP after all, may allow it to plug the gap in its erratic public finances. Somewhat linked to public finances is the state's favourable tax regime, or lack of taxes. This is a key draw of living in the state, yet despite this, the population has fallen for the last 3 years to 2020, though perhaps the largest opportunity comes as an indirect consequence of the unfortunate costs of climate change. Warmer temperatures and receding sea ice is likely to enable Arctic shipping routes, something Alaska is likely to capitalise on given its strategic location. So overall, the land of the midnight sun is one of extremes, the largest US state, yet has one of the smallest economies and populations. The state's economy is driven by a few natural resources, yet is vulnerable to the commodity boom and bust cycle. It has been wise with its commodity windfall so far, with the Perma Fund and Native American corporations providing Alaska's residents with dividend income, an income boosted by the state's very low tax rates. Yet many consider the state's strength as a resource-rich open land as a key weakness, with its remoteness restricting opportunities and creating labour supply challenges. As we come to the end of this video, the Alt Simplified team hope you've enjoyed it. We'd be keen to hear what your thoughts are in the comments below. What do you think about Alaska's economy? Maybe you're from Alaska and would like to share your views. Are its economic challenges and opportunities justified? Do let us know in the comments below. And as always, if you enjoyed this video, please hit the like button and subscribe. See you in the next video.